While the United States has reduced its influence in the Middle East, China is expanding its diplomatic and economic ties to the region. In reality, China has struck important deals and maintained cordial ties with Iran. Agreements with longtime U.S. allies like Saudi Arabia. Additionally, China has made public their absurd petrodollar alliance with the Middle East, which is poised to devastate both the U.S. economy and the petrodollar. This month, a number of nations, including Saudi Arabia, the United Arab Emirates, and others, increased their oil shipments to China. As a result, Russia has been able to strengthen its position in the Ukrainian market it invaded. In October, oil exporters from the Middle East sent 4 million barrels of crude oil per day to China. Additionally, the total may be increased because not all tankers have revealed their final destinations. This year, Russia is also eager to discover new markets for its petroleum sales outside of Europe. Furthermore, the 27 nations that make up the European Union have voted to ban any maritime commerce with it due to its invasion of Ukraine. Fortunately, China is a friend of the nation. Customs data show that since April, China's overall imports of oil from Russia have climbed by almost 20. As of now, information on tanker movements in October points to a pace of about 38 million barrels per day. And compared to September, there has been a rise of over 491,000 barrels per day. Oil prices slightly rose after the Organization of the Petroleum Exporting Countries and its allies pledged to cut back on production. And while Western sanctions put further strain on the OPEC partnership, Russia, a significant member of the coalition, expanded shipments from its Far East. Additionally, it has started using the Northern Sea route to ship Arctic oil to China. It's no news that China has just eclipsed the U.S. as Saudi Arabia's top oil consumer. Additionally, predictions indicate that Saudi Arabia will export oil worth $95.07 billion in 2020. Just $6.59 billion in worth of goods were imported into the United States from China, compared to $24.07 billion worth. Investing by China in Saudi Arabia as part of the Belt and Road Initiative reportedly reached $43.47 billion in 2021. The Saudi government has now made the decision to start investing in Chinese companies. In actuality, the $10 billion deal between Aramco and Chinese oil companies. In addition, stories regarding the petroleum and oil trade have appeared. Right now, neither the $13.04 trillion U.S. market nor the $25 trillion U.S. Treasury market can be matched in terms of breadth and liquidity. However, in the not-too-distant future, things could change. The current increase in the dollar is a result of rising interest rates. As a result, import prices have surged in poorer countries, adding to the global debt crisis. Now, at least, this may prompt a reconsideration of the global reliance on the U.S. dollar, increasing the openness of China's trading partners to dealing in yuan. A threatening of US dollars as a unit, this raises the level of risk associated with the predicament the U.S. currency is in. The beginning of the narrative takes place in 1944, when Europe is at its most perilous during World War II. 44 nations came together in New Hampshire to create the Bretton Woods system in response to these worries. All countries were obligated to connect their currency's value to gold while also pegging their currencies to the U.S. dollar under the terms of the agreement. They believed that putting the economy on a gold standard would do just that. Fortunately, the rules of that agreement have allowed the U.S. to maintain a tight grip over world trade. However, a gold scarcity in the U.S. in the early 1970s contributed to the final collapse of that system. The petrodollar strengthening and eroding following that, the U.S. dollar's value swiftly fell as nations all over the world lost trust in it. In exchange for OPEC's assistance in the military, the Organization of the Petroleum Exporting Countries, and then President Richard Nixon agreed to handle all oil trade in dollars in the middle of the 1970s. As a result, the petrodollar was created and oil prices increased by a factor of 4. Since that time, the U.S. dollar has had a unique position as the main reserve currency of the globe. Agreements with Saudi Arabia and the rest of the Middle East also contributed to the dollar's strength in the global oil market. America's position as a global leader has been strengthened by the dollar's supremacy in the oil and gas futures market. However, dollar-based financing continued to be effective even when the euro became a significant rival in the 1990s. For emerging economies like China and Russia, holding us treasuries and building up sizable dollar reserves was their sole choice for safeguarding against currency volatility. And all the while, divisive leaders like Muammar Gaddafi of Libya and Saddam Hussein of Iraq battled nonstop to destroy the petrodollar. Unfortunately, their actions led to an invasion, a murder, and the mass killing of innocent people. The Middle East policies of Vice President Joe Biden are currently drawing increasing criticism from the Saudi royal family. Actually, Riyadh found Biden's decision to quit supporting the Saudi military campaign in Yemen irritating. Recent Houthi strikes on oil facilities and Biden's efforts to revive the nuclear agreement with Iran have Saudi Arabia more concerned than ever. The United States' long-standing security obligations to the House of Saud have caused concern among the Saudi authorities and other nations. China's changing oil policy and its impacts on foreign policy going back. China raised its purchases of Russian crude oil in only May. It's a great method to recover the funds lost when Western nations reduced their purchases of Russian energy in response to the invasion of Ukraine. Due to Western sanctions against Russia's energy exports, the rise has led to Russia overtaking Saudi Arabia as China's main oil supplier. The second largest economy in the world purchased 8.42 million tons of oil from Russia in January, a rise of 55 from December of the previous year. Beijing has now extracted economic benefits from its isolated neighbor in place of openly denouncing Moscow's dispute. 7.82 million tons of oil from Saudi Arabia were imported in May. The total amount China has now spent on Russian energy supplies has climbed by about $1 billion, reaching $7.47 billion. 4 months into the crisis in Ukraine, fresh customs data reveals that consumers in the US and EU have either totally avoided importing Russian energy or have vowed to do so much less in the upcoming months. The demand from Asia, especially China and India, has stemmed some of those losses. India's imports of Russian oil grew by a factor of 6 between the months of March and May of this year and the corresponding months of previous year. But according to research firm Rystad Energy, China's imports rose by a factor of 3 over that time. Now, China has been Russia's main destination for crude oil exports since 2016. Just days before Moscow attacked Ukraine, Chinese President Xi Jinping and Russian President Vladimir Putin met in Beijing. They declared that there would be no restrictions to their connection there. Due to COVID rules, Chinese demand hasn't really increased. Additionally, towns have started to loosen their restrictions in recent weeks, which has led to some improvement following the worst epidemic the nation has seen since the pandemic start. As a result, supply chain problems have diminished and industrial production has grown. Beijing's purchases of Russian liquefied natural gas rose by 54 from a year earlier to 397,000 tons, despite a decline in worldwide fuel imports. Through its opposition to Western sanctions on Russia and Western military deployments to Ukraine, China has even been charged with serving as a diplomatic shield for Russia. Beijing and Moscow, who were once sworn adversaries during the Cold War, have deepened their cooperation recently. Even the first road bridge in the area, which links a city in eastern Russia with one in northern China, was inaugurated by them. Xi recently informed Putin over the phone that China fully supports Russia's sovereignty and security. The Kremlin declared that the two nations had resolved to boost their economic cooperation in reaction to illegal Western sanctions. Unprecedented sanctions have been placed on the nation by the West as retaliation for Russia's actions towards Ukraine. Moscow has therefore been rushing to find new suppliers and markets to replace the foreign businesses that left Russia as a result of the invasion. The sanctions, which would reduce the U.S. reliance on Russian energy, were unanimously approved by the bloc's member states in late May. Several European nations are heavily dependent on Russian oil exports, despite the fact that America has stopped all of their shipments. Energy exports generate a large amount of revenue for Putin's government. Additionally, Western countries are attempting to sever Moscow's supply lines in order to stop it from fighting. What do you think of China's new alliances with and moves towards Saudi Arabia, Iran, and Russia? Do you believe this will have a significant negative impact on the U.S. economy? Click on these videos right now to know more about secret news nobody tells you about.